I'm Keren Fanan. I'm the co-founder and VP of Revenues at Giraffe, which is an investing platform offering value-driven personalization of popular indexes. And we've recently raised $10.5 million.
Hey everyone, thanks for tuning in and welcome to the Fundraising Debrief, the podcast where we share the real stories behind successful founders and the recent VC financing rounds. My name is Vlad Cazacu and I'll be your host today as we interview Keren Fanan and follow her journey from product manager to division leader at one of Israel's fastest growing startups to chief revenue officer, all before starting her latest ventures. She brings practical fundraising advice and sales insights as we explore the different venture capital landscapes of Israel and the United States. For more information about running a successful fundraising, including show notes, highlight clips, and exclusive scenes, follow us on Twitter and Instagram with the Fundraising Debrief, as well as on our website at thefundraisingdebrief.com. This episode is brought to you by Flowlie, the number one choice for secure deck sharing and fundraising automation used by thousands of founders from 50 plus different countries. Now, let's dive right in. Keren, such a pleasure to have you on the podcast. Really appreciate you taking the time to have this conversation with us.
Thank you. It's a pleasure to be here as well.
I think in this conversation, we're going to explore for the first time on the podcast this duality of a company on two different countries, two different continents, raising capital and expanding to a new region of the world. So very excited to learn more about you, Giraffe, and your $10.5 million seed round. To begin the conversation, would love to get a little bit more of an understanding of what Giraffe does for everybody here that may not yet be familiar with what you guys are doing.
Sure. So Giraffe is an investing platform which is empowering a value-driven personalization of popular indexes. For example, if you care deeply about the climate, you will be able to customize your portfolio to exclude fossil fuels or gas companies. And if you're deeply passionate about animal rights, then you shouldn't be investing your money in companies such as Tyson Food or McDonald's and so on, all of them being a part of leading indexes such as the S&P, for example. So the idea behind it is that if money is a catalyst in the world, then we can use our individual money to influence public companies to be more responsible for the issues that we care about as individuals. So we started Giraffe because we wanted to empower investors to remain true to their values and principle, but also we wanted them not to compromise on their financial confidence. And that's why we've built a unique technology that is relying on leading indexes for more sustainable returns. So basically, our technology offers a fresh approach, I would say, to impact investing by overcoming the limitations that exist today when it comes to investing in leading indexes. When you want to invest in leading indexes or any stock collections for that matter, then you normally do it by investing through traditional index or mutual funds or ETFs, which lack personalization. But with Giraffe, you can actually customize these same indexes to fit your specific beliefs, values, or whatever you want to do. I think the last interesting part about Giraffe is that we have taken this technology and basically turned it into a benefit system tailored for companies. And by that, we are encouraging employers to actually give what we call to be the impact investing credit or impact gift to their employees, because we believe that by giving impact credits to employees and basically giving them access to simple impact investing, we are achieving several things. One, we are empowering individuals to make more ethical financial decisions. We are highlighting companies that genuinely care for their employees' personal beliefs. And of course, we help employees foster financial wealth.
That's fascinating. And I'm curious, why was now the best time to start the company? Like, what motivated you and the rest of the co-founders to begin Giraffe now?
So, look, Giraffe actually had started its journey almost 2 years ago by securing its first round from angel investors, all of them being a part of Itai, who is our co-founder and CEO, inner circle. So it was a classic beginning of a seasoned entrepreneur who already had a proven track record of turning ideas into reality. And the belief was, as I mentioned, to kind of bridge the gap between making an impact investing and using our own capital wisely, and the fear from, sacrificing the financial returns or financial success. And so we started by building the technology and making sure that it could actually work, and also building what we call to be the driven, engine. So the value driven engine is an engine that we created that helps investors to understand which companies should be excluded or included in their portfolio based on their beliefs. So first we designed and created the first MVP version of that technology. And when it became clear that we want to push it further and take it to customers and investors, we decided to kick off the round.
And I think this is a great time to switch gears a little bit to your specific role, right? Because now there's an MVP, there's a product, and it's ready to be commercialized. And that's exactly your role as VP of Revenue. Looking back at your career from PM to GM to revenue leader, how has your career shaped towards those growth roles? And how do you view the role of the CRO at an early stage company?
I think that I've always been deeply passionate about two things. One of them is technology, and the second was to build things from scratch. And I just knew that I want to understand how technology and products actually work. And in order to do that, not just in a lofty or more abstract level, but in a real way, I just have to do it hands on. It's just like if you want to learn a new language and turn it to be a second nature for you, you better go and live in another country so that you can observe all the nuances of that new language. And it's the same thing when you do something such as managing product hands on. You learn about technology from a different angle that you cannot do otherwise. So my career basically kicked off in more technical and product roles. And I think the turning point came when I got a chance to build a whole new product category at Get, which is an on demand ride hailing company. And I think the opportunity to build a startup within an already fast growing startup was the perfect opportunity for me. So, as a part of Get, I co founded a product called Get Delivery and transformed it into a significant source of revenue for the company. And that ride kind of set up the stage for me to step up and eventually manage all the revenue streams as the chief revenue officer. I think the shift actually from my unicorns days to diving into the startup life wasn't really something that I planned. Yet, at the moment that I met Itai and I learned about Giraffe's vision, it just resonated with me so much that I knew that I have to be a part of it.
What part of it resonated most with you? It was specifically the opportunity to help build towards the greater vision, the opportunity of the interesting market and go to market strategies. Was there any particular part of Giraffe that attracted you most to this role?
Yeah, so I think that there were two things. First of all, I was attracted to the idea of turning my investments into something that reflects my belief. For example, I see myself as a career woman for years. I'm also a mother of two girls and a boy. But when I realized that I'm actually, advocating for women rights all day, but then I'm investing my hard earned money in companies that has no female representation whatsoever, it kind of felt ridiculous because, from one hand, I'm advocating for something, but on the other hand, I'm giving my money to companies that are not aligned with that. So when I met Itai and we discussed about the idea of taking the same investing strategy that I'm using today, but being able to kind of pick and choose what I don't want to invest in. And hopefully by taking my approach of not investing in, let's say, S&P 500 companies that has no female representation on their management team, and multiply that by millions of people that will do the same, I'm pretty sure that will make these companies to be more aware of whether they have gender diversity and equality within their teams. So I believe that there is nothing better than working on a technology that is set up to improve something that you care about, right? It's when your kind of passion meets the day-to-day work. And I think that was the situation at Giraffe. And considering my background in revenues and setting up things from scratch, both at Get and my period at Moon Active, which is a gaming company, it just made total sense that I will join and help shape everything that has to do with revenues in the company.
It almost feels like an ikigai moment for you, where everything gets aligned and you truly find the blend between what you're good at and what you're really passionate about. And I'm curious to explore a little bit this idea of alignment as well from the perspective of Giraffe's fundraising. You're helping investors invest in things that better align with their goals and their values and their passions. So I'm curious, how did you bring this whole concept of alignment in your very own fundraising as you were seeking capital from venture capital firms and figuring out who is truly the right investor to support you in this mission?
So I think that actually the bigger pillar that we were interested at was more the experience in the fintech climate. So it's not that we reached out to specifically impact or ESG investors as a strategy. Rather, we search for VCs that specializes in the fintech industry and that can appreciate the complexity behind a product such as what Giraffe has to offer. Now, obviously, fintech is a broad kind of section, and not all fintech startups offer an investing platform like we do. But during the fundraising meeting, it was very clear which investors are more kind of would be able, I would say, to support us in the vision and to bring the knowledge, but also to appreciate what we are trying to do from both technological perspective and the value perspective. I think that what we saw is that they really liked the complex technology, which is, I would say, something that can develop to something bigger in the future, meaning when I give you the opportunity to personalize leading indexes or to personalize ETFs, I'm basically opening a gate to, I would say, a new level of investing that does not exist today. The ability to use that to boost impact investing, which was already a growing trend and is continuing growing a year on year. And of course, the proposition for the corporations and the ability to take that investing technology and make it accessible for corporations through the impact gift cards that we developed.
Got it. So it seemed that it was much more the financial technology angle and their level of expertise rather than the impact and their alignment on the vision. Or maybe there was a little bit of both, but the primary value add that you were looking was expertise in fintech. So I'm curious, how did you go about figuring out who are truly the right investors for you in the fintech space? Because there's a lot of conversation out there about value add and platform functions and expertise. But there's a point where the rubber meets the road, where you truly get to see those investors in action. How much value can they provide to you? So, what was your process of diligence, like reverse diligence on the investors and figuring out who are truly the fintech leaders you want to partner with for this round?
Lots of chats with VCs from both the US and Israel. And we ended up teaming up with Group 11, and then Altair Capital joined. I have to say that it's not always a question of which VC brings exactly what you want. It's also a question of their pace, how soon they react. If you see, at the end of the day, being entrepreneur, you have goals, you have targets, you want to move ahead. And sometimes some of the VCs, they just take their time. So I'm not saying that we couldn't find someone better to help us, but the combination of having someone that is experienced in the fintech space and being responsive to the pace that we were expecting these VCs to react to was something that was critical to us. It's just that sometimes the clock ticks at a different pace for entrepreneurs and VCs, right?
Absolutely. And what do you think made those people wait? I think that's a very common thing that's happening in venture, of people taking their time. What do you think was the cause of that? And vice versa, what do you think was the cause of other people not waiting and moving faster at your pace?
So I think that similar to many things in life, it's not always 100% related to you. Sometimes specific VCs have other things in mind, or it can be even something that is related to someone specific in the firm, right? Because normally these VCs, at least the Israeli ones, actually, they are smaller and they have specific people that deal with specific sectors. So, sometimes it's about how they're passionate about your ideas, but not always. Sometimes it's just a matter of how they manage their time and the other things that they have on the plate at a single moment. And when we raised, I think we had the opportunity to choose to make a progress with those who cooperated better with not just the vision, but also our goals for closing the round. It was a great fit, I think. Obviously, if we were in a situation that we had to wait, I guess we would have been waiting for some of them to get back to us or to react faster than they did. It's interesting, but I had the opportunity to speak to many VC investors, and a lot of them find themselves reflecting back on how fast they could have reacted with a specific company that they wanted to invest, but they were busy with that or this. Or sometimes it's even the lawyer that took the time, or it was this specific section in the agreement that made them take their time. And, the startup ended up securing funds from someone else and the deal didn't happen. And fast forward, you ask yourself whether it was or wasn't the right decision. So that's how it goes.
And do you feel that in your specific case, were you able to lead that pace a little bit better with some or with others? Or do you think that it's always kind of a mutual ground where both parties to some extent have to agree to be on the same pace? I'm wondering like how much influence you think you had on the pace of the round and the timing of close.
Um, that's a good question. I think it's a matter of both parties, and I think the behavior of each side kind of fuels the other side to react accordingly. With our case, yeah, I think it just that Group 11 showed an interest of being the lead investors. Actually, the story is interesting because they actually decided to invest and they provided a $7 million term sheet. And we then decided to actually increase the seed round from 7 million to 10 and a half and capital. So we ended up actually closing the round a bit better than what we hoped for at the start.
Interesting. And have you seen any differences between approaching Israel-based investors compared to US-based investors in terms of their approach to the actual process of due diligence and investing?
Overall, I don't think so. I'm sure that there are differences considering how different Israelis and Americans are by design or any other country. But no, I don't think that that was something that we recognize. I think we felt very comfortable with VCs that are a combination of being very strong in the US, but also have some connection to Israel. It kind of helps to kind of bridge the gap between the different cultures, even.
And in terms of the intro paths into those particular investors, you mentioned the CEO's network around Israel and the fact that he's been a serial entrepreneur. What about the US? How did you navigate the introductions and the exploration of new investors in multiple countries? And how are you managing that whole process?
A lot of it was definitely on Itai's shoulders because of the fact that he is a seasoned entrepreneur and his network and his track record. And I think that at the end of the day, because Israel is a company that excels in, building startups and new technologies, but also specifically in building technologies for the US market. It created a situation that obviously the connections and network that we had in Israel opened the door for more connections in the US. It just kind of the way the setup works today. A lot of the American VCs have their offices in Israel, and they want to invest in companies that some of the founding team is based in Israel. The technology is something that is shaped by Israeli entrepreneurs. And I think that for entrepreneurs that coming from Israel, that's something that is a great benefit.
And was there anything specific? I'm wondering, why do you think that's the current status quo between that technological symbiosis, quite frankly, between Israeli founders and the American market? What do you think is some of the root causes of that?
Well, I think, and that's something that is the status quo for us, I think, in Israel, that, considering the size of Israel and the amount of new technologies and new startups and the amount of founders that are, originally coming from Israel, it's just something that positions Israel as a company that is, like a startup nation. And I think that for American investors, knowing that there is high chances of finding great ideas and great new technologies coming from Israel, I think that's what makes this connection so strong.
Had the majority of investors that you work with already to approach already have a clear understanding and had experience with Israel-based teams, with Israel-based companies, or did you at any point had found yourself to a point of having to explain some of this to an investor who wasn't really aware or hasn't really invested or deployed capital in that region?
No, actually, so I think we ended up partnering with investors that knew very well the landscape in Israel. And I think that it's not only that it makes sense, it's also smart. I mean, the same way that the first angel investors that invested their money in Giraffe knew Itai and like personally and knew his track record, which made it easy to build the trust also from the beginning. So the same thing goes with VCs. Like if you can find a way to partner with someone that knows the kind of even the kind of the language, and I'm not talking about the actual language but the nuances of the language and the overall approach of a specific landscape, then why not just kind of partner with that? Like it's better, definitely when I'm talking about seed rounds, when it's just the beginning, it's kind of better to partner with someone that already knows where you're coming from and you share kind of similar expectations.
And I heard you say trust, and I think this is a theme we've explored across a number of episodes. So I'm curious your approach to building trust, specifically in an age of digital conversations, online meetings for the very first time compared to the in person handshake and the long standing relationship. How have you approached trust building throughout this fundraise? And how much of that was new relationships versus pre existing relationships that have been cultivated over a number of years that led to this?
So, first of all, I think that in order to build trust, definitely the more in person time and face to face time you have with a person is better. I think that as a team, especially on Itai's side, it was something that we made sure that will happen. Considering the, I would say, unique situation of Giraffe, because I don't think that every new startup is founded by people that already built two startups in the past and bring something with them to the table, specifically in the space of fundraising and having a network to open the doors at the beginning when it's really the hardest part, right? You have to take an idea to make people to buy in to your idea, and then to develop the idea in a complete vacuum that you have no idea how people will react, and just believe all that time that you're in the right direction. So with our case, I think, and again, I'm, giving all of that credit to Itai, I think it was simply because of the relationship that were already in place, considering his background and our CTO's, who is also a co-founder in Giraffe, background as well.
So, what do you think was some of the biggest learnings that you personally took out of this fundraise moving forward to be, let's say, better prepared to tackle a full on fundraising?
So I think that, first of all, the next round will certainly be more relying on actual data that we can show now and couldn't show when we just kind of kicked off the previous round, because every single month in a life cycle of a startup is critical, and there is a progress, and the reality changes all the time. So being more specific about what works and what doesn't, and the discoveries that we had, that's something that is definitely going to be a part of the next round. I think that we would search for someone more strategic. So we talked about the seed round being more focused on the fintech space and less on the impact side. So we were not actively looking for impact or ESG driven funds, but we actually believe that the next round should be more relying on a strategic partner that would be able to share the same vision that we have, specifically on the impact space. And yes, you asked about my learnings. I think that I really kind of discovered how similar the fundraising process is to my sales background. Because I think at the end of the day, when you're pitching something to a VC or to a customer, you're basically pitching them an idea that's here to solve a need and is aiming to upgrade the existing reality to become a better reality. And just like in sales, you really have to truly believe in the value that you're offering, especially on the seed round, right? Because it's all about the value and the team. You don't have the data just yet. So you have to believe that what you're offering is here to fix something that doesn't work today. And also, just like in sales processes, one of the most important things is to being open to learning more from the other side about what they know that you don't know. And the same principle applies to pitching to VCs, because they see countless founders and they hear countless ideas, and their decisions, whether it's a positive or negative decision, reflect something. Now, I'm not saying that every piece of advice from a VC is something that requires an immediate action to be taken, on the startup, but I think that every piece of advice is certainly worth considering. Just that, as I think that every feature request coming from a client is a valuable feature to consider. So this entire process of building your revenues and building your track record with your customers is very similar, I think, to kind of building your path with investors.
So I'm curious to explore this parallel a little bit more around revenue function and fundraising function and the process around it. A lot of revenue leaders think about the top of the funnel, about conversion rates, about channels that work better than others. How did you approach that on the fundraising standpoint in terms of the actual number of funds that you spoke with, the number of meetings that you had, and how have you seen conversions work on warm intros versus cold outreach versus founder introductions? What worked, what didn't?
It's important to say that I'm not saying that the situation that we had at Giraffe is necessarily the only situation that exists or the only path to lead to a successful round. I think that it very much depends. If we're talking about revenue generation and focus on the top of the funnel, I couldn't agree more. I think that's what you need to do when you already know exactly who is your target audience and what type of top of the funnel you want to create. And then you better bring that in large numbers, because you will cut every portion of that the more you kind of progress in the funnel. So, if you can increase the top of the funnel, you are more likely to close more at the end of the funnel. But if you kind of minimize the top of the funnel, also in sales, bringing in an innovative product to life, you minimize that to specific companies that you have relationship with, the decision makers there, that you formed some sort of trust or kind of personal connection in the past. Even if you bring just a handful of these companies, the likelihood to increase the conversion rate is much higher. So if I'm going back to raising funds, I think that considering that you are speaking to an entrepreneur that already built several startups in the past and did that successfully and can easily reach some people, knowing that there is already some form of relationship, that's a safer approach and a more likelihood to convert to an actual fundraising rather than growing the top of the funnel in this specific case. Obviously, if you're coming without a track record or a network, then yes, I would try to grow the top of the funnel as much as possible, to speak to as many investors as possible, to learn everything from every potentially yes or a definite no from what they say, and progress from there.
And I would like to ask this quick follow-up question on the learning piece, because you mentioned in your previous answer that every advice it's worth considering, and VCs are going to give a lot of advice during the fundraising process. So
Right.
I'm curious, what's your internal decision-making process, if any, around capturing that advice from VCs and then filtering against your thesis? And at what point you lean into some of this advice that's been more consistent, more recurring, versus sticking to your guns and saying, well, but this is the trajectory of the business and we've clearly set that in stone? What's your approach to flexibility around feedback coming from investors specifically, which are not your customers, but they are the people backing the company and providing the funds to build that product for the customers?
Right. So I think there are two kind of aspects. First of all, I don't think there is a need to ever go against your thesis. So if it gets to pivoting into something that you as a founder do not believe in, then that gap is probably too big. Like, how could you execute on that? You have to trust the fact that you will eventually will believe in something that contradicts what you originally believed. So that's too risky, and that wasn't actually the case for us. But I think that when we heard something about, look, we think that going into companies and offering that in this and that method and not what you originally offered, and that feedback came out more than once and twice, and we kind of heard it multiple times, so it helped us kind of shape the proposition to be more accurate. I think we gathered a lot of feedback regarding going with our product and technology just through companies or also direct to consumers, which is, I think, a very kind of common question when it comes to a B2B2C product. Eventually, Giraffe's technology is an investing technology for the end user, but we believe that we need to take this technology and help corporations open the door for their employees, which is more powerful than going directly, for example. So that was something that we kind of heard from the investors a lot about what they think and what what resonate more with them. So I think it would be more on shaping the go-to market or the specific proposition, but not at the level of changing completely the core of what you're trying to do with your product or technology.
So it's more the tactical pieces that you're mentioning. I think that's where it blends into something that you were saying earlier around the fintech expertise, is people who have helped other people do this before and can actually provide some useful tactical support.
Exactly. I think it's more about the tactical support, which is critical. I mean, and it's, I think it's great to come with a very strong vision that and the desire to build something that doesn't exist and is set up to improve the reality, as I mentioned before. But I think that when it comes to taking tactical steps of how to do it or how to start, I think it's actually a great thing to observe the feedback and react upon it, and not just to block it and say, I know better.
And I'm curious to explore a little bit in the last piece of this episode the things that didn't work and you end up learning from, right? Were there any parts of the fundraising process or the interactions with investors that, looking back, you say, well, maybe that's not exactly how we should have approached it. Maybe that was a mistake that didn't lead in the right direction, but now we know better. Some of the potholes that you stumbled into, if any, throughout this seed round.
So I think that considering the fact that Giraffe offers something that is, from one hand, very innovative. I mean, at least this is how I see it. Today, most of us, when we want to invest in leading indexes or any collection of funds, we invest in a certain way. And Giraffe comes and offers a different way. By the way, that way has a name, and it is called direct indexing, which is a more kind of advanced technology that allows people to invest in multiple of companies mirroring a specific index, not by investing in a specific ETF. I think that what we've learned is that when we come with this new technology and offering of doing stuff, because it has its advantages of personalization and the value driven control that we are giving to people and cost advantages, etc., then some people, they just love innovative ideas, but innovation also has its risks. So I think that what we've learned is that in many cases it actually helps with VCs to show that what you're trying to do is something that there is kind of already a movement towards that direction, but you are doing it better, faster, in a more kind of, I would say, advanced kind of approach with the technology, rather than just making something up from scratch. That's a critical nuance. So sometimes innovation is amazing, and sometimes innovation should come on top of something that's already happening as a trend. And I think the kind of combination of both of these things drives a lot of positive attention from investors.
Making sure you don't swim against history, right? Making sure that you're aligned with where the world is going towards.
Exactly. And you're seeing that, and you're basically coming to do it better, faster, in a more sophisticated, I would say, way. But exactly, but you are not swimming against a trend that's already happening. Yeah, I think that's it.
So I'm curious to pivot on our last piece of the episode, is some rapid fire questions, somewhat related or somewhat not related to business. We always love to start with this question, which is, what do most people don't know about you that you think more people should?
Wow, that's a good question. I think that people don't know that when it comes to my work and career, the bigger the role that I take and more kind of things that I manage, the more I have the desire to do things hands on. I guess that was a part of my understanding of kind of joining and founding a startup, which is the ultimate, you have no one, just do it yourself. I would
Awesome.
say that.
And in terms of a recent book, podcast, piece of content, or conversation that recently changed your mind about something or the way the world works, what was that piece of information that challenged the way you were thinking about things and made you see things in a new way?
Wow. It's funny because I'm a type of person, and actually maybe that's a better answer to the question before, is that I see myself as a person that loves to get to the point that I'm changing my mind about something. Because if I'm changing my mind about something that I had a very strong opinion about before, it means that I encountered new information that brought me to this kind of aha moment that made me change the way I think. Wow, I'm thinking about all the stuff that happened lately. I mean, just when it comes to the financial landscape, I'm discovering so many things that are not exactly what I thought they are. Um, yeah, I need to get back to you on that, I think.
All right, we can go to the next question. One person you consistently looked up to throughout your career, not necessarily saying a mentor or superhero in a sense, but someone you consistently admire throughout your career.
So, in terms of like public figures, I think there are two. One of them is Steve Jobs. I think that every in every role that I took through my career, there was always something that he said that I kind of used as a reference, from how to look at your career or job in general, and to make sure that you find a work that make you feel as if you're not working at all, which resonates with me, through being super innovative with some products, through deciding what not to do, which I think it's one of the most difficult things to do. Throughout my career, I had the opportunity to grow some successful ventures, but I also experienced some ventures that did not work and we had to shut it down, including closing up an entire section and letting people go. But doing that helped us being more successful with what we decided to push forward. So that was another kind of quote, I think, or piece of information coming from Steve Jobs. So I really admire everything that has to do with how he approached building products and deciding what to do and what not to do and setting up high standards. Again, not saying that I agree with everything he represents, but definitely he was someone that I looked up to a lot. And I think the second one is Sheryl Sandberg, that invests a lot, like a big portion of her time and what she's doing to promote gender equality and to empower women and to acknowledge the things that no one talks about when it comes to being a woman in a more kind of male area. I think that also throughout my career, there were a lot of things that she publicly said that resonated with me and helped me kind of push forward in achieving my goals. So, yeah, I think that would be my second choice.
Those are two great examples, and I like the complementarity between them on the impact side and on the innovation side, which makes a lot of sense why you're co-founder VP of revenue of an impact investing platform. Would like to explore the last question, which we always got some interesting answers to, and it's a tradition that we hold internally at the company for quite some time, which is always end any meeting with a point of gratitude. who is one person towards the end of this episode that, reflecting back on your career and your entrepreneurial journey, you would want to say thank you for their impact that they had on your career growth, your company growth, your fundraising? You choose, but it only has to be one.
Okay, so I will go with which is not so much reflecting back because it's still the present, but I will definitely go with Itai, who is the CEO of Giraffe, because I think it's, I don't take it for granted for a seasoned entrepreneur that has all the experience that can partner with people with a similar level of experience to bring someone like me on board, that I had the experience of building things, but still it was in the like as a part of a bigger company. So Giraffe is basically the first time that I'm actually founding a startup from scratch, going through the entire process of taking an idea and turning it into something. And throughout this process, I could really see how Itai and his experience, how he's using his experience to teach me on the things that you could not know if you're doing that for the first time. Like, there is no way that you can realize all of this stuff without doing it yourself over and over again, or having the opportunity of doing that in the past, now sharing your insights with your team. So I think that I'm enjoying the experience of not just founding a startup, but also doing that with partners that kind of help me deal with the difficulties and challenges alongside the fun aspects of it while in the making, which I couldn't be more grateful for.
Fantastic. And it's amazing when you got the chance to work with people that you respect and they respect you, and you're truly building together something that's meaningful. Keren, my gratitude to you for joining us on this episode today. Really much appreciated. I'm certain a lot of people are going to get a lot of new insights and a better understanding on how to navigate the fundraising process and what it really is to build a company from scratch from this conversation. So I really appreciate taking the time to do this.
Thank you. It was a great pleasure for me too. Thank you.
What a great conversation. If you enjoyed it, make sure to like and subscribe to our podcast and be on the lookout for a new episode in 2 weeks as we interview another amazing startup founder and debrief their successful fundraising story. This podcast was made possible by Flowlie. If you're currently fundraising or planning to do so in the near future, create a free account today on Flowlie at flowlie.com. That's FLOWLIE.com. And get access to an investor database curated just for you and powerful deck sharing capabilities with advanced access and engagement tracking. Are you ready to take your fundraising journey to the next level and join thousands of founders across the globe who use the platform every single day? Find the discount code in the show notes and sign up today. That's it for today's episode. See you next time.